प्रेजेंटेड बाय ईबिक्स कैश, हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines. Nirmala's booster budget does the trick on Dalal Street. Sensex jumps 696 points within kissing distance of 60,000. Nifty up 203 points. Investors gain 6 lakh crores in 2 sessions. Big statement by the Finance Secretary. Cryptos will never be a legal tender. Rules out their role as a currency. Makes it clear they have no government authorization.
बिटकॉइन या एथेरियम या वो कुछ किसी एक्टर का फोटो को एक एनएफटी बना दिया, वो सब कभी लीगल टेंडर नहीं बनेगा।
Prime Minister Modi attributes his government for the increase in India's GDP, says this year's budget focuses on providing basic amenities to the poor and middle class. And a warning by one of the top economists in India, HSBC's Pranjul Bhandari tells Business Today TV in an exclusive interview that higher capex in this year's budget comes at a high price, that of a cut in social spending. Later on the show, we get you an exclusive conversation with Ajay Seth, Secretary Economic Affairs, and Tuhin Kantapande, Secretary Deepam, on the booster shot budget. Finance Minister Nirmala provides the much-needed boost to Dalal Street. Benchmark indices climbed for the third day in a row as analysts gave a thumbs up to the union budget. Sensex rallied 696 points within kissing distance of 60,000. Nifty jumped over 200 points to climb above 17,700. The broader market supported the rally as both mid-caps and small-caps rallied over 1%. Among sectoral gauges, a strong rally was seen in financial and realty stocks. IndusInd Bank, Bajaj Finserv, Bajaj Finance, HCL Tech and HDFC Life led the gains. Leading the losses were Tech Mahindra, Nestle India, Ultratech Cement, Shree Cement, Britannia. On the other hand, investors have added 6 lakh crore rupees of wealth in 2 sessions after the announcement of the union budget. A day after the finance minister gave first hints that cryptos may be accepted as an asset, the government has made it clear in no uncertain terms that cryptos will not be accepted as a currency in India. Interestingly, this is what Business Today TV had reported would happen last October.
डिजिटल रुपी जो रिजर्व बैंक का इशुएंस होगा वो लीगल टेंडर रहेगा, बाकी सब बिल्कुल लीगल टेंडर नहीं है, will not become, will never become. बिटकॉइन या एथेरियम या वो कुछ किसी एक्टर का फोटो को एक एनएफटी बना दिया, वो सब कभी लीगल टेंडर नहीं बनेगा. सो ये क्रिप्टो एसेट्स जो हैं, दे आर एसेट्स which are two people have to determine their value. You can buy gold, you can buy diamond, you can buy crypto, but उसका कोई सरकारी ऑथराइजेशन ऑफ वैल्यू नहीं है. वो एक दो लोगों के बीच में जो ट्रांजैक्शन हो वो वैल्यू है.
As India makes efforts to free itself from the clutches of COVID-19, Finance Minister Nirmala has stepped up on capital expenditure to boost recovery. This exclusive focus on capital spending is expected to spur private investment. Listen in to what the Secretary of Department of Economic Affairs, Ajay Seth, had to say in an exclusive conversation with Business Today TV.
Welcome to the show, Mr. Seth. Let me begin by asking you to explain to our viewers the key points as far as the macroeconomic logic of the budget is concerned.
Thank you, Mr. Dutt. In terms of the macroeconomic numbers, one, the budget looks at the needs of the economy and realizing that the private investment is yet to reach to the pre-pandemic level, and there are still some gaps. They may take some time. At the same time, the consumption per se, the private consumption, is also a bit lower than what it was in a pre-pandemic. It was felt that there's a need for government to step up and come out with efforts to crowd in private investment. That's how the capital investment by Government of India, its agencies, as well as from the state governments, has been increased sharply by about 35%, 7.5 lakh crore. And if we count in what the monies are given to states for capital investment, another 3 point odd lakh crores, 3.18, if I recall. The total investment is about 10.5 lakh more plus, and there's about 4.1% of GDP. The second, while doing so, we are fully conscious about the fiscal consolidation path, which Honorable Finance Minister had announced last year, and which is also the need of the economy. So a very credible path, we are fully committed for that, with reference to the revised estimates of this year of 6.9% of GDP coming down to 6.4, about half percentage point reduction, and then reaching to 4.5 another 3 years thereafter.
Mr. Seth, I will try and address some of the questions that various entities have raised post the presentation of the budget. One of these questions is regarding the increase in overall expenditure. And it is said that it is only 4.6% in nominal terms compared to the revised estimates for the current year. How would you respond?
See, one should be conscious of this fact that the pandemic year, 2021, required a massive response from the government in a selected manner. And government was very judicious in providing a targeted support to those who needed it, and plus investment in health infrastructure and so on. And but that's not the normal fiscal stance year after year. And as a result, the fiscal deficit in that particular year was 9.2%, which is the function of both. One, revenue is not getting realized fully because of the pandemic impact, but at the same time, expenditure going up. For this year and the 21-22 build upon the same thing, bring it down. But the fiscal consolidation can happen only when the less productive expenditure, I'm saying the less productive, doesn't mean that whatever is other expenditure is not productive, has to be allowed to grow less than the normal growth in the economy. Only then we get the fiscal math correct. So it has to be seen in that context.
One quick follow-up on this point. Has the expenditure been switched? Is that what you are saying, that you are moving away from certain kinds of expenditure which were required during the peak of the COVID pandemic to different areas to support longer term growth?
See, we are taking the expenditure levels to several programs which were at the pre-pandemic level. In the sense, just to give you an example, that for example, the current year vaccination provision was 35,000 crore rupees. Now, almost 100% of the adult population, target population, already having got covered. By the March, we would have reached that level. Next year, we don't require that kind of investment to happen. So next year it provides for 5,000 crore, and of course, if more is required, will be provided for. So that's not provided for, it's not needed. Similar manner on food subsidy. This year, because of the second wave and the third wave, which is we are currently in, free ration over and above the normal scheme was provided. Now, that is something which is not expected, that we will have, now will reach, hopefully, the third wave will be the end of the year. So the next year, there's no provision for a free ration to be provided for, and so on. So this is basically getting into the business as usual, as far as business as usual, meaning that normal year, not a pandemic year. So we are not treating 22-23 as a pandemic year. We are treating 22-23 is the year of nurturing growth in post-pandemic era.
Year of 2023 is nurturing growth in post-pandemic era, and therefore the next question, again, we've been trying to get feedback, and I'm taking that question from the feedback. One of these is that claims that the expenditure GDP ratio is declining to 15.3% from 17.8% in the pre-COVID year. Is that assessment correct?
We have to look at the totality of the aspect. So what the budget has tried to do is in terms of providing fully for on the expenditure side for the normal schemes, including the subsidy schemes, at the same time stepping up on the capital side. So I'm not sure what the numbers you are talking about, because even in the pre-pandemic 1920, the fiscal deficit was a reasonable number. Of course, that thereafter, that last year, a lot of transparency has been brought to the budget. So we should not again not compare it with the pandemic year. That would be my suggestion.
Taking Air India disinvestment as a learning curve, the government's privatization reform now focuses on LIC IPO and PSB privatization, as well as a few new recognized assets. PTTV's Karishma Sudani speaks with DIPAM Secretary Tuhin Kantapande on what will be the disinvestment pipeline for FY23, which is pegged at 65,000 crore rupees as per the union budget.
Budget speech also mentioned about the LIC IPO. In fact, the word is that in next 7 to 8 days, probably DRHP, the prospectus is going to be filed. How confident are we that LIC IPO could happen before March, the year closing?
Yes, of course. LIC IPO will come in March, and our DRHP will be filed next 7 to 10 days, next week, by the end of the next week.
Right. And in terms of the embedded value and other such figures, they're still in the process, I understand.
Embedded value has been done. Now it will be going through the IRDA, the regulator, and then of course feed into the DRHP. Got it.
And with BPCL, there has been a major hindrance because I think that was 4 rounds of EOIs followed by a major gap, and you've spoken about it, that there are certain global concerns that have to be factored in. But further going, how are we looking at it at the timeline of BPCL privatization? Can that be expected in the next financial year?
And I just want to make a correction. There was no 4 round of EOI. There was only one EOI.
There were extensions.
Yeah, there were extensions in the sense that they, before that thing and COVID struck, and obviously we had a collapse of not only petroleum market, but also, there was total lockdown and so on. So that was a time. But thereafter we got bids, and because it's a $10 billion of net worth requirement for this, it's a very large transaction. And we did have do have bidders. They have started their due diligence after the signing of the undertaking. But there have been also certain issues in terms of energy transition and other things where, increasingly it has become very difficult for, a large transaction to conclude in the refining sector, particularly petroleum refining. And we have been, of course, through our transaction advisor, persuading them to come forward for financial bidding. And that's where we are.
Right. And so because of these global concerns, is it also making it difficult for government to think about disinvestments in the petroleum sector, or is that probably not a question to look into right now?
No, as of date, what I can say is that we are into a transaction. So let's hope that it concludes.
Right. Another key announcement that was made is on the PSB privatization, where it was announced that 2 banks will be privatized and the roadmap is expected on it. Is that going to happen in the coming year?
I think that was an announcement last year, and I think Department of Financial Services is seized of the matter. So that's much I can say. Because that would require a legislative change.
Right. And there was also an announcement on the insurance, one insurance company that could be taken up.
Well, I think you will come to know whenever our processes, whenever the things are considered in the Cabinet Committee of Economic Affairs for an in-principle decision, then I think we inform the media whenever it is cleared, and then we go forward for our process for appointment of transaction advisors, and then, going for roadshows and EOI.
Is that going to happen soon, sir?
You wait and watch. We are.
Okay.
we are rolling out things, and we have to see the timings and so on. Yeah.
Absolutely. And it has to be a sigh of relief for you after Air India, but there's so much in the pipeline that I'm sure you will be on it. But one last question, sir, before I let you go, and this is that what can be expected as a part of the privatization pipeline? We've discussed all of this. These are in the process. Is it anything new? New assets that are going to be identified, or right now the attention is going to be to execute the one that are in the pipeline?
No, I think pipeline concept itself means that there is something at the end, there's something in the middle or a different parts, and something in the beginning. So therefore, there will always be some feedstock which will be put in the pipeline, and there will be something which should conclude. That is a right way of doing, disinvestment transactions.
Right.
Because as I said, that disinvestment transactions itself are a little longish. You will have to have undergone a serious amount of due diligence and processes and work. These are companies which are divested. These are not merely simple asset sales. There are a whole lot of issues are involved. The contracts have to be looked into by this thing. There's a long-term implications of various issues. The assets have also to be looked into. The liabilities have to be looked into. The SPA has to be negotiated. So all these are very complex things which take a lot of time with the right kind of advisors, which we also have, and which of course the bidders also they hire. So there is something which will, in order for us to conclude something, for example, if I am supposed to conclude in this year, I must have started it a year back or so. Right. In order for me to do that. So from that point of view, there will be, there should be a new entrance in the pipeline as well. And this is in accordance with our new PSC policy.
Will the government focus on capex drive the economy? Chief India economist at HSBC, Pranjul Bhandari, is of the view that higher capex in this year's budget comes at a high price, that of a cut in social spending. In an exclusive conversation with Business Today TV's managing editor Siddharth Zarabi, she rated the budget as neutral. Listen into an excerpt of that conversation.
Thank you very much, Pranjul, for your time with us. Day 2 of the budget, and we've all had some occasion to go into the fine print. As they say, the devil is always in the detail. I'm going to ask you to begin by telling us your own thoughts and observations about the direction of this budget.
Yeah, great. Thank you. Great to be here. So yes, indeed, we've had like overnight to digest this budget. I think the positive is the fact that there is a clear positive thrust on capex, capital expenditure. I think that's a good thing. It has come through. But unfortunately, it has come at a cost. I think the costs are twofold. Number one, social welfare spending has been lower than we had hoped for. And also the fact that now the government is borrowing a lot, which means that there is stress in the bond market, which are pushing up some of the yields. So, this is my overall take. When you put all of this together, the fact that fiscal deficit has been reduced, and that generally is sort of anti-growth, but yet capex has been increased, which is generally pro-growth. If you combine the two, the net impact on growth, on GDP growth from this budget, in my view, is neutral. It's sort of a neutral budget. Some things are looking great, like higher capex, but some other things, for example, social welfare spend, are not looking that good.
Okay, that's a good point. And I heard keywords like anti-growth, but the real point that you make is neutral as far as growth is concerned. Therefore, as a follow-up, does this budget support the recovery, or does it switch directions towards being more conservative after 2 years of some extra spending to beat the pandemic impact on the economy?
I do think that the finance ministry has a strategy at play. I think their strategy is that, look, once you give Narega to somebody, you help out that person for that particular day's consumption, right? But when you give a job to somebody, it's permanent help. I think they have tried to move from temporary help to permanent help by doing capex and trying to get jobs at the back of capex. That I think has been the general strategy. It looks good to me. But my only problem is that they could have continued for a little longer with, little higher social welfare spending, given the stress we have in the bottom of the pyramid. We are seeing in rural India, demand is slowing. We are seeing, what we call K-shaped recovery. If you track the Narega numbers, demand for Narega works is far outstripping the supply of Narega works. So that does show that there is demand for social welfare schemes at this point. So the government could have continued being generous on that front for a little longer and then eventually gone off to the capex bandwagon. So that probably would be my number one browse with the budget.
Pranjul, why has this choice been made at this stage?
Yeah, that's a great question. And then there's a macro backdrop to it. The next 2 quarters, growth is going to be very strong, led by pent-up services demand. Last year we saw pent-up goods demand. By the end of last year, many of us were fully vaccinated. We are more confident to travel now. Once Omicron ends, we will be traveling more. There'll be a lot of pent-up services demand in the system. But the problem is anything that is pent up, has an expiry date because it runs its course. And my worry is, by the middle of FY23, 2 quarters down the line, we'll realize that the pent-up services demand has gone and growth is slowing, and we don't have a growth driver. What's going to lead growth from here? The budget, in some sense, is planning for that. It's planning for the second half of the year. It is trying to set the stage for capex, because the hope is that by the time pent-up demand sort of comes off, by then a new investment cycle will rise and become the new driver for growth. I think that was the general thesis of the budget. My only worry with this thesis is that maybe the stage is not fully set for a capex rise. I agree with you that public capex will increase. The government is trying to increase capital expenditure, but government only makes up 20% of investment. 75 to 80% is actually private sector driven. How is the situation for the private sector? And when you look at that, there are some positives. I think the number one positive is that the balance sheets of corporates are much healthier today than pre-pandemic. They have been able to shed a lot of debt at a time, there was so much liquidity in the system. But unfortunately, just healthy balance sheet is not good enough to drive investment. What they are really waiting for is policy certainty, is macroeconomic certainty. There is just too much uncertainty in the system, wave after wave, commodity prices. So until that settles, I'm not sure private investment will come back in a hurry.
Pranjul, since you speak about this, I'm tempted to ask you, is the government getting any data which is not perhaps publicly available that dictated this strategic choice, as you call it?
Well, look, I don't know how to answer that. As in, I must say that there are a couple of issues here. Number one, we don't have very good data in the informal sector. Even our GDP numbers, they sort of don't really capture what's going on in the informal sector. They just assume that the informal sector is in line with the formal sector, but sometimes that's not true. When you have a huge shock like the pandemic, informal can do worse than the formal. So one thing is that, look, if you go by our official data, then we don't get very good real-time indicators on the informal sector. But what we do get for the informal sector is many other surveys, as in a lot of surveys have come over time. And, we're getting more and more surveys every day. And each of them is pointing to the fact that there is distress and there is a lot of problems at the bottom of the pyramid.
And that's all we could pack into this edition of Business Today. Thanks so much for watching. Do stay tuned. News and updates coming up.